Hello everybody. On Sunday, one of the tag members sent me a chart with the Donchian channel. And that inspired me to make a video for you this week explaining the Donchian channel. And the reason is because this is a very cool indicator that anybody can use effectively. And it's actually very helpful and very simple. It's probably one of the simplest indicators out there, and that could help you a lot. If you want to look for it, basically go to here to indicators and type Donchian. There you go. Okay, click there and then you will have this. Now I want to tell you more or less how this is done. The upper boundary of the channel is the highest height of the last 20 periods. The lower boundary is the lowest low of the last 20 periods. And the middle line really is the middle point. They add the highest and the lowest together, and then they divide it by 2, creating this like the middle average of the two, no? The middle point. So the question is how to use it. And I'm going to teach you probably, there are many ways to use it. I mean, people usually use it to use that technique that everybody talks about, the reverse to the mean, which means that basically they buy the extreme here, aiming for prices to go to the middle line. And that repeats almost every time. Now, you can see almost every time, right? And that's why people do that strategy. I don't like that strategy. First, because it's a counter-trend strategy. Secondly, because it's very risky, very dangerous, because you will be trading against the trend. You will not have the wind behind your back. You will have the wind right in front of you. And thirdly, because that was not the way that the Donchian channel was originally meant to be used. The Donchian channel is a trend following indicator. So the whole idea is to catch trends. And so the idea is to trade with the trend. So how do we do that? Basically, and I'm going to show you or tell you the easiest way, and it's actually the way that it was originally intended. Basically, you look for the horizontal line. See, this is the horizontal line here. And if you recall, we had been looking for, I think I showed you several examples of this particular case. Perhaps this chart will remind you of that. This was a cap and handle pattern that I think I showed in a different lesson. And you remember, well, we had this level here where we were waiting for the breakout of that. That's at 105.35, more or less, right? And basically, if we go to the Donchian channel, we will see that that horizontal line corresponds precisely to that level. And so how are we going to use it? Basically, you spot that horizontal line, and then whenever prices print, not close necessarily, but print above it, 1 pip above it, that's your entry. So you enter long here. And in this particular case, this is a very, very good example. And the reason is because while the upper boundary of the channel is completely horizontal, you can see that the lower boundary of the channel is making steps, meaning that is moving higher and higher and higher, and then there is the breakout, and that's a phenomenal trade. That's a fantastic opportunity. So you can look here, for instance, during the downtrend. Let's take this example. So where would you enter? Well, a pip below here. Where would that be? Right here. Did the trade work? Very beautifully. Then the next entry is right here, 1 pip below here. Notice what happened. Did the trade work? Beautifully. Right? And exactly like that, it continues like that. Now you have this horizontal line here, didn't go well, right? It didn't, in fact, it produced a higher horizontal line, which prevents you from being too biased for the downside, because, well, the channel is already warning you that it's moving, stepping up, not stepping down as before. So that's the way to do it. Now, this is a daily chart. Can you use it on an intraday chart? Of course. And for instance, we can use this example right here, because this is a 4-hour chart. And it helps us catch what to do with this uptrend. We were expecting that uptrend, right? Based on many things. I don't really remember what I showed you before, but I think it was either Elliott waves or the cap and handle pattern, whatever pattern it was. We were expecting for that 105.35 break. So now what happened when that broke? In that case right here, that's about 105.30, right? So that's our entry. Okay, good. And then now we have another horizontal here. You see, it's small, but that only tells you that prices are in a hurry to continue higher. So you spot that little horizontal here, and you add 1 pip above it and continue long. And here you have another horizontal. Then you add another unit with 1 pip above it and continue moving, and so forth and so on. You can see every time it happens, you can add to your position. People usually wonder where to place a stop based on this strategy. Typically, the recommended stop is the opposite band, meaning that if you go long here, your stop would be here. So if you are long here, your stop would be the same, and so forth. So now here, the stop would be here. Now this is a very large stop, and there is one interesting thing that one should keep in mind, and that is that it is rare when prices are in an uptrend or a downtrend, it is rare that they go to the opposite side. So perhaps it's not a good idea to put a stop on the opposite band and then trade it from there. Although it could be good, you have to test it. But perhaps the middle line would be a better place, and track it below it or above it if you're going short. So let's look, for instance, this was a 4-hour chart. Yeah. So let's look at another example. Let's look at this one, the ES, and let's use a hourly chart. so you can see how it works. And we can take it from right here. We have the horizontal line here, 1 tick below it, short. And now we have the horizontal here, 1 tick below it, short. Notice that, by the way, that the stop here would have worked better on the opposite. Had you used a stop in the middle, you would have been stopped out. But in the opposite wouldn't be that bad. And you know why? Because the width of the channel, if the channel is too wide, then you don't want to put such an extreme, right? So if the channel is too wide, you want to put a stop above the middle line and not above the opposite, I would say, no? So anyway, so now you have another one here, you have a sell signal here, and so forth and so on. Now let's see, let's make it current. Okay, very good. Here we have horizontal line. Now we can enter long here. Remember, this is always a breakout entry. Okay, and now here you have another one. You can enter right here, and now you have another line, and you can enter right there. That produces another line that you can enter right there. And if it continues moving above here, you could enter again there and being part of the uptrend. So that's a great use of the Donchian channel. I think, of course, you can use a Donchian channel for spotting support and resistances and all that. But what I just explained to you is the easiest way to use it, is the actual original way that Donchian, the whole channel was produced by or designed by an analyst by the name Richard Donchian, and he intended it as a trend following indicator and as a breakout system. It's a breakout system that the total traders use. So it's a very popular strategy, and it works really nicely. So try it, test it, let me know your questions, and let me know your experience. Maybe you find something here that helps you make quite a bit of money, because this is really effective strategy. If you ask me, well, how does it work on sideways markets? Well, it doesn't work. On sideways markets, it doesn't work. And the reason is because, well, very simple. It's a trend following indicator. It's intended for trend following. So in sideways markets, you may have these false breakouts, right? And if that is the case, typically the period that is used is the 20 period. So if you see that you are getting stopped out too often because of sideways markets, then use a longer period, use a 30 period or something like that. That allows you for better range, right? For the breakout to be in a better range, and that breakout likely will be less, or will have less probabilities of being fake. Hope this helps you. See you soon, and look forward to receiving your questions and your experience as well.